Think of the stock market like a giant ocean. Some days the waves look calm, and other days powerful undercurrents pull everything down even when the surface looks peaceful. And today, one of those hidden currents was short selling, the quiet force that often pushes a stock lower long before anyone notices. Welcome to Stock Find, your daily source for stock market updates, company earnings, and financial insights. Stay informed, stay ahead, because smart investing starts with smart news. Over the past few sessions, a surprising thing has happened. The number of traders betting against Rezolve has grown sharply, not because the company suddenly collapsed, but because when the market senses uncertainty, sharks swim closer. And yes, that explains the recent downward drift. But here's the twist most people don't see. When whales enter short positions, they eventually need to swim back to the surface, and that process is called short covering. And short covering? That's the moment when calm water suddenly erupts into giant upward waves. Rezolve is walking into a period filled with catalysts, not only from company news, but also from the overall market environment. Today was a risk-on kind of day. Imagine investors slowly opening their umbrellas again after a storm, taking cautious steps back into growth stocks. Even though Rezolve stayed in the red, it barely dipped compared to the broader chaos. Big names like JP Morgan actually fell much harder. Meanwhile, the Russell Index, the one full of smaller companies, raced ahead of the S&P almost 3 times faster. That's like watching motorcycles outrun trucks on an open road. Small caps leading is usually a signal. Investors are preparing for movement, and sometimes big movement. Bitcoin also punched through with strong momentum. And Bitcoin is like a global mood indicator. Whenever it surges, risk-on assets often wake up shortly after. All of this connects to Rezolve, because when the overall environment improves, small AI companies feel the relief first. Somewhere in December, day or night, Rezolve is expected to reveal its updated ARR for 2025. Now pause for a second. Why would a company give this update early when they are not even required to do so? The mandatory update is scheduled for March. December is optional. Companies don't reveal optional updates unless they have a reason. And in finance, updates usually come early for only one reason. They want to show something better than before. So the real question now becomes, how strong could the ARR number actually be? Maybe $160 million, maybe $200 million, and in a dream scenario, $250 million. Higher ARR means the company is growing even without buying others, the strongest kind of growth for any business. Some investors complain, where are the contracts? Why not show them publicly? But think of it this way. Big corporations treat data like sensitive documents locked inside a safe. Most contracts come with NDAs, strict agreements that prevent companies from showing anything publicly. This is common, not suspicious, not unusual, just standard business behavior. Back in September, Rezolve had an ARR of $90 million. In their next update, it jumped to $110 million. Then came the CrownPeak acquisition. CrownPeak alone is expected to add around $70 million in ARR next year. But analysts at Maxim Group already counted this $70 million inside their 2025 forecast. Meaning, it's not a bonus, it's part of the roadmap they were already expecting. Still, Rezolve holding steady around the 270 range today shows investors are not panicking. They're waiting, watching, preparing. Next year, Rezolve is expected to begin quarterly reporting, a turning point for any company. Quarterly updates build trust, just like regular checkups with a doctor. Investors feel updated, informed, and connected. For small tech companies, transparency is oxygen. Bitcoin pushing upward. AI stocks warming up. Indexes shifting. But the biggest event is just ahead, the Fed meeting. Wall Street believes there's an 85% chance the Fed cuts rates tomorrow. Not an aggressive cut, nothing extreme, but the market is not dreaming of big surprises either. Only 2 cuts are priced in for next year, one in June, one in September. That's a realistic expectation, and a stable, strong economic environment is exactly what AI companies need. Not fear, not recession, not uncertainty. If the Fed keeps liquidity flowing, companies like Rezolve breathe easier, because small AI firms don't survive in environments filled with panic. They thrive when confidence returns. and right now confidence is slowly returning. Rezolve's chart is forming an interesting shape, something investors often describe as an inverse head and shoulders pattern. In simple words, a bullish sign that momentum could flip. But here's the part most short sellers might not realize. Rezolve confirmed the December ARR update in a tiny reply on social media, a small response many traders never even saw. Dan Wagner mentioned, ARR update in December. Delistings coming soon. Quarterly reporting expected and more transparency on current ARR. If short sellers don't know this, they are walking blindfolded because positive numbers could force them to cover quickly, and when short sellers cover, they fuel the rise they were trying to fight. This isn't financial advice, just an opinion based on the pieces in front of us. Rezolve seems closer to breaking above $4 than crashing below $2.50. The setup looks like a spring being pressed down, and December is the hand that might release it. The story right now is simple. Short sellers increased pressure. The stock dipped, but a huge December catalyst is approaching fast. The broader market mood is improving. AI stocks are waking up. Bitcoin is signaling strength. The Fed is entering a crucial moment, and Rezolve stands right in the center of all this. Sometimes the biggest waves in the stock market form quietly before anyone sees them. The information provided on StockFind is for educational and informational purposes only. We are not financial advisors, and nothing in this video should be considered as financial advice. Always do your own research or consult a qualified financial advisor before making investment decisions. Thanks for watching StockFind. Don't forget to like, subscribe, and turn on the notification bell so you never miss the latest market analysis and stock updates. See you in the next video. Until then, invest wisely and stay informed.